Mehta joins us, and you got Kunal with us. I just want to mark the market breadth here, and the breadth has caved in again. That's been the problem point for the broader market, and for the small and the mid cap index. The underperformance, I think, is very stark now. It's very visible. One big reason is that domestic institutional investors only in the month of October, just in the month of October, we still have a couple of trading sessions left. They've sold 7,000 crores. Now you would imagine that the domestic guys will not take a very nuanced view of the US presidential election. If at all the global guys, they get worried about US presidential election, back home the investors and their LPs. In this case, domestic institutional investors have raised cash. It could be redemption, it could be underperformance, which is hurting them now, but stocks which are dominated by domestic institutional investors, especially metals, PSUs, they've taken a complete slap on the face or completely on the chin. Britannia, it's been a one-way street for Britannia ever since they came out with numbers. But HUL, on the other hand, I think is doing very well. I'm just scanning through the sectoral gainers here if I can identify something evident for our viewers. Well, nothing substantial, if I may use the word. Tata Consumer today, again, the safety harbor has caved in. Telecom, for some strange reason, is holding on, but the selling in telecom has been so acute that I'm not surprised with the kind of comeback telecom sector has seen today. Yogesh, how would you read into the market right now? Numbers are not that bad, yet the broader market is refusing to go high.
Yeah, the current market is defying all the negatives right now. And a few sectors are dominating and they are commanding the market uptrend, and that is also backed by the FIs buying. So we have seen top three private sector banks along with Reliance was the major driver from 10,800 to 11,800, and now it is subdued and corrected almost 10%. And the IT sector, where the numbers are humongous and very promising set of numbers, with FY21 outlook to be a very great for at least Q3 numbers are concerned. So overall, the recipe is was there for the markets and backed by FIs. Altogether, market has given a strong run up. But however, as an Indian investor mindset, still there are so many of negatives, and post unlock scenario is still ambiguity. The scenario is still under ambiguity, so that is not giving the confidence. And yet, the market is at 12,000. I think one should wait for now for further investing into the Indian equity market right now, because already we are priced in Q3 and Q4 numbers at this point in time. So better to wait, and the run up is there. The buying is there in sectoral move rather than broader market move.
Just notice that there is a huge price bump up in Tejas Networks and First Solutions. Lots of small cap, mid cap IT names are really now so-called joining the bandwagon. Yogesh, what do you like from the mid cap IT space? We've heard from the big four, and if the commentary from the big four or the top four is to be believed, then looks like happy days or good days or strong moment growth days are back for the IT industry. What is the best way to capitalize if somebody wants to only buy a mid-cap IT space? For someone who's missed buying a TCS or a Infosys in last couple of days and now wants to catch up with a mid-cap IT stock, which is the best one on your radar?
They could post the large cap IT run up, and now mid caps are on the roll. I think if anybody wants to play around, then if I have to segregate the basket of P multiple as well as lower P and the higher P, then I would say Tata Elxsi, one of those can be considered into IT space, which is global auto engineering. I think that Tata Elxsi would be a strong play here that can be looked at, because the global auto, there is a revamp into that apart from Jaguar, but rest of the countries are doing well. So there, I think fundamentals are very much intact. That could be seen, and if at all anybody wants to still look at anything as a lower P multiple or the reasonable P multiple on the value front, then Birlasoft or the KPIT, but those are very niche segment. But yet to play on the mid cap, I think KPIT and Birlasoft both are there, which can be played for as a portfolio stocks.
Prices. Yogesh, a quick outlook then as to where you stand when it comes to the metal space. Would you be a bit circumspect given the cyclical nature as well as volatility in prices?
Regarding the nature of this commodity cycle, it is very difficult to catch them at lower or the higher level. So I generally avoid metal space stocks into the portfolio.
All right. Time for a short break right here on the show. Come right back. Lots more lined up. 11,846 on the Nifty. We've got the Sensex down 140 points.